Recording. So welcome to this Monday, November 3rd. And right now it looks to me like we have a market which is pretty much back in the middle of the range. Friday was an interesting day. It's technically stage two still. They started running this down a little bit in midday Friday, and they're kind of right back up here towards the midpoint. And it looked to me like it had a pretty strong close, and then they backed off right into the close. So, kind of how it goes. Overnight, however, has been holding on to the gains pretty well, and I would just say that we are in pretty good shape there. So, starting off, we technically we're in stage two still since the extended Friday to the downside. It closed that gap, so the gap closed from the ES is a fact now, and that was the rollover gap. But at this point, I would say that we are pretty much going to be in stage three on the profile. So we're building value around 6880, 6900. We'll see what side of this is going to go on next. So getting into that latter part of the year, you have these, I think the rebalancing stuff going in for various funds and so on and so forth. So the rally usually runs out a little bit before Thanksgiving, the Santa rally. It's at least what it tends to do. But this may have to do with tax planning and stuff like that going on, where people move stuff around just for tax reasons, take profits, sell some of their winners, take profits, and so on and so forth. Or yes, the opposite. They sell losers to take profit or take losses, and then they sell the winners early in the year to take to postpone taxes. A bunch of stuff like that starts going on late in November, early December. So that could put a little damper on it, but we are pretty much still in earnings seasons though. So we had the big tech earnings come out last week. There are going to be more earnings coming out this week, but maybe not the same focus as we had last week. But starting off today, I would say we start off range bound, looking to buy weakness, sell strength, and see if they which side they're going to go on. If they start extending past this 6840 now, the low, I would be a lot more concerned about them retracing this and really starting maybe running it down here to this lower levels at the 6770, because we haven't really reverse retested that 6800 level yet. So that could be the next thing that happens. But what's that lower level 6840 that comes out, we may see a big retracement day here, right down here to reverse retest support down here at the 6800. But I would start off range band though, so I'm going to be looking to buy against 6870s, 6875s. 68, 65s, 6850, 6840 for rotations back up. Looking for short setups, and not necessarily 6890, that's pretty aggressive, but 6900s, 6910s, 6920s, 6930s, 6940s for rotations back down again. So that's kind of the dynamic I'm looking at for 6940 is going to be way up here. Yeah. So let me move this guy away for a second. I'm going to do this. Just drag it down a little bit. You can see this. There you go. So 6940 is going to be right up here against these upper areas. Above 6940s, well, we have 6950s too. You can include, but I would look for short setups all the way up here, and we'll look for buying opportunities all the way down to 6840s. Then we'll see where they're going to go. It could be nice intraday rally to run it up to the higher. So, I mean, at that point, you maybe want to be if they start taking out maybe the first two resistance areas, you may want to try a long trade and see how far they're going to go. Same thing on the way down. If you take out a couple of 60, 75 and the 65s, may stay on the short side. At that point, try a short trade and see how far they want to take it on the downside. The key thing is just avoid selling into support. That's usually where you get caught in a shitty trade. If you look at you chase it down, or you're late on your entry and really selling into support 6850 or 6840, that would be a bad move. Same thing here if they take out the first resistance area 6910 and the 20s, and then you start getting short right into, or getting long right into 6930 or 40, and just chasing it right into resistance area. So you're really looking for them to take out the 20s, and they start taking out 20s. That's where you want to try your long, if that's what you want to do. And the same thing below that 65s. Try short when you start taking out that area. And you can always at that point have a pretty tight stop. If you start running against you, just get out early on that thing. So that's kind of how the dynamic is on the ES to get started. So range bound trading, look to fade the edges, rotations back to the middle again. Looking at the Nasdaq and the bonds, the bond market hasn't really moved a whole lot. Right now, it looks like they're trying to take it a little bit lower right at the open. So a little bit of a move to the downside. In the bigger picture, they're pretty much in the middle of everything. So they're back here in the middle. And what I did, I asked if you fold this guy together right now, you can see here that we are pretty much in the middle of this big range. It's pretty much evened out. And I'm probably going to leave it like this now. We have a nice edge here at the 116. Nice ledge here at the 119, 119.10. And I think they're right now in the middle of that range, working themselves down toward the lower end. So we may find ourselves down here at the 116. We'll see. The bond market right now is pretty much in the middle. So I'm starting off range bound. If anything, I may keep a bias to the downside just to see, since the overnight looks pretty weak right now. You can see that the overnight hasn't really extended a whole lot. They've been testing support right now. They took out one level here at the 1705. They're down to 17. So I would probably look to sell strength early on. So like try against the 1705s, 1710s, maybe up to the 1716s for rotations down again. I think above the 1710s, you can probably take off the short bias and go back range bound. So that's kind of pretty tight range on that one. But the whole overnight, the whole day range is not huge. So just had to be you had to be a little bit more aggressive at the edges at that point. It looks to me like they're going to try to grind these down here. So at least to get started. So we'll see how it goes. But starting off to sell strength against these first two levels above the 1710, taking off that short bias and going back range bound. And on the Nasdaq, pretty good move to the upside going into the close on Friday. Then they retraced a little bit and actually closed towards the lower third. Not the great close on the Nasdaq, a little bit weaker than the ES was. Looking at our F1, the capital flow on Nasdaq, we are pretty much in the middle of this range right now. So they haven't challenged the gap on the Nasdaq, by the way. So haven't really, they're a lot stronger overall. If you look at the bigger picture, but the Nasdaq had a pretty good move on the upside here. You see, they haven't even challenged any of that area. So they start taking out the 28, 25, 8 or 25 900s. Start challenging the 800s. This area of support. We could see a pretty good move to the downside, and that may happen. Just had to forget a headline or some reason for it, but you never know. And when you have that risk off day, and there's a bunch of profit taken, and that gap is going to get tested one way or the other. So yes, you can count on it. But right now, I'm going to start off range bound. We are in the middle of that range, so it's looking to buy weakness against the 26 120s, 80s, 26,000s, 25 940s, 870s down to that 850 level. Looking to sell strength, 26 190, 310s, 270s, 300s up to the 390s. I would say above that 315, 320s. I would lean in on the long side. These probes to the upside are just that. But if they take out that 310 to 20 here, this upper resistance area, we're going to be in good shape to take this higher. So I would stay on the long side if that happens. But I'm still looking for shorts all the way up here. So shorts up to the 180s. What did they say? 180 to 190s. The 220 to 230s. 260 to 270s. 310 to 320s. Rotations back down again. So that's the range. Sell resistance up to that 320s. Buy support all the way down here to that 850s. And if they start trading outside of that range, then we may have either a rally on our hands to the upside, or we're going to have one of these risk-off days, and there could be a pretty good move to the downside coming. Now, if they take out that 26,000s, I would probably try a short trade and see how far they can run it. If they start taking out the 230s, I would try a long trade and see how far they can take it. Again, don't sell into support and don't buy into resistance. Just avoid that and you should be fine. If you're wrong on the trade, just get out early because you can always keep a reasonably tight stop and you try to do go with trade on a aggressive pullback. All right, so that's the ES and the NASDAQ to get started. Looking at our oil and gold. So oil and gold. Start with oil. It's not doing much. It's kind of flopping in a range still, a little bit down in the overnight. So again, I would just trade this as a range bound market. It hasn't done much. I haven't tried to trade oil for a while now. It's just stuck here. So I mean, as you can see, it's trading in this a little bit higher than they were a few weeks back or a week back. But this was the when they put on the Russia sanctions, they popped up a little bit, and that was it. Nothing happening. So I would say range bound trading on oil. If they start taking out resistance at 62, I would be leaning in on the long side. If they take out support at 59, 59.50s, I would lean in on the short side. So between that 59 and the 62s is where we are trading. And I would just stay range bound. So looking to sell strength, 61, 61.30, 61.70 up to the 62.20s. We're going to buy weakness, 60.50, 60, 59.70, 59.30s for rotations back up. So that's kind of the dynamic. Again, same as on the other ones. If you have a couple of levels in a direction move, and two support areas, you can potentially try a short trade, or if you take up a couple of resistance areas, you can potentially try a long trade. But oil has been really finicky in terms of the directional moves and consistency, so I would be very cautious about that. It does fade the edges at this point. And then finally, gold. A pretty good move to the pretty good retracement from the lows there, and then they're pretty much stuck here Friday. Didn't do much. I'm gonna split out my Friday. There you go, my overnight. There you go. So Friday's trading didn't do much. It's settling in around 4,000. But we had a pretty good run down here a couple of days back, and they retraced right back up to 4,000s, and that was it. They just stalled there. So it looks to me like we had a pretty good, well, pretty snappy move, right? First they took it high, took it up to 4,000, then they overshot it by $400. Then they retraced it and run it lower by $100. Now we're back up. They retested this low volume area, close these single prints. And we're right back up here to the 4,000, and looks to me very much that they're going to start building value, consolidate a little bit here. So I would be range bound on gold at this point. Capital flow, I would favor the long side, but I would for the day session, I would probably stay range bound, favor long side if anything, but not be shy about taking those short positions either against resistance. So they're going to buy against 4,002. 39.87, 39.70s. They're going to sell strength. We are at one level now, but 4,039 or 4,040s, 4,048s, up to that 4,059s for rotations back down. And outside 4,059 to 60, below that 39.70, look for more of a directional move at that point. So that's gold. Pretty straightforward, I think. But I'm avoiding trading gold on purpose. Oil is not fun. It's just not going anywhere. It's sloppy. Gold, it tends to be too volatile. So you just get chopped up if you're too aggressive on gold. And they stall. It's not like they move. Once they move, if you get in, you could be okay. But most of the time you have big moves and then complete retracement, and it's just stop it on a dime and run it back and forth pretty violently. So it makes it really difficult to get anything going there. So that's oil and gold. So range bound gold, range bound oil. I would favor the long side on gold, if anything. All right, so that's those two. Back to the ES, and both ES and NASDAQ kind of where we left it. A little bit to the upside here in overnight. Let's see if they can hold on to that going into the trading day. So we'll leave it there for now, guys. And I'll say good trading. It's this beginning of November, and then let's see what happens. In terms of news, I don't think any news is coming out, but just a quick peek before I wrap it up here. Technically news for the PMI, ISM, construction spending at 9:45 and 10. I don't know if any of those going to come out, but it's if it does, 9:45 and 10 is when those would come out. So we'll leave it there. Good trading, guys. I'll see you back at 11:30 for the next update. Later.